On the 23rd of June 2016, the people of Britain voted to leave the European Union, a decision that caught almost everyone by surprise, including politicians, financial markets, big business, pollsters, bookmakers, and even prominent Leave campaigners such as Nigel Farage, who conceded defeat shortly after the polls closed at 10 p.m, only to start backtracking a couple of hours later as the actual results started to come in, resulting in an immediate panic as market participants reversed their positions. So whilst the Bank of England was able to contain the immediate market panic, nevertheless economic uncertainty remains extremely high, with the potential for many years of confidence draining paralysis as businesses and investors put off making major decisions until they can see the light at the end of the BrExit tunnel. This video, as part of a series based on my in-depth analysis posted at marketoracle.co.uk, looks at 10 major drivers of the UK economy and markets and of what to expect to happen next. But firstly, for a quick recap of what actually happened on Brexit night that caught virtually all by surprise, then do watch my selection of the highlights from 8 hours of BBC coverage of the EU referendum result, and also see the second video on trading markets during Brexit night that illustrates how all hell broke loose once the polls closed Thursday 23rd of June, triggering a sharp rally in sterling and FTSE futures that was sustained until the actual results started to be announced shortly after midnight, triggering a 5-hour market panic. The Friday stock market plunge in the wake of Brexit that caught the financial markets, bookmakers and pollsters by surprise, who had by the close of polls all been discounting a Remain outcome, and thus sent stock futures and sterling soaring, only to do a panic reversal a couple of hours later as the actual results started to be announced, with the initial triggers being the results out of Sunderland and Newcastle, and so with each result a new wave of selling would hit the markets that by 5 a.m. had seen the FTSE futures plunge to below 5,800 and sterling to spike below 132 to the dollar, which triggered waves of doom-laden commentary warning of end times for the UK economy, stocks, housing and sterling, as so-called analysts published reams and reams of, nonsense to explain why the end was now and stocks were literally set to crash into a Brexit black hole. So, effectively, all those who had been wrong for 7-year duration of the stocks bull market were once more proclaiming its demise. And it did not matter what the FTSE actually did post-Brexit, for the blogosphere perma-doom infection had firmly spread and taken hold of the mainstream press such as the FT, who already predisposed to selling fear and panic to the masses of doom-laden calls of an imminent Brexit disaster, a Brexit Lehman's moment even. So what did the FTSE actually do? Well, the FTSE futures bottomed early Friday morning at about 57.50 before the markets opened, and then with each passing trading day have gathered strength and momentum to the upside, with the last close of 65.77, its highest since August 2015, and apparently having had its best week in over 4 years. So what happened to the Brexit stock market apocalypse? Take note, dear viewer, of the garbage that is 90% of that which passes for market commentary, which is basically written by clueless journalists, academics or salesmen. And as for trading Brexit, then as of 12th of June, my forecast conclusion based on a year-long analysis was that Leave would win on 51.3%, as illustrated by this video. Thus, a Brexit forecast implied that the FTSE and sterling would plunge on Brexit night, especially as in the immediate run-up to the count, the FTSE and sterling were strongly trending in the wrong direction by discounting a Remain win, which was also true of the bookmakers and pollsters, all of which was resulting in an excellent risk versus rewards opportunity to profit from, as illustrated by an article I posted Thursday morning and a video posted Thursday afternoon, as the bookmakers and markets increasingly discounted the Remain outcome. And then the polls closed and all hell broke loose as YouGov confirmed that Remain would win, triggering a further sharp rally for the FTSE futures and sterling that was sustained until the actual results started to be announced shortly after midnight, which I covered in the following video exactly what happened in the markets during a very volatile trading session. So against the prevailing year-long perma doom, my consistent view all year has been that the stock market would trend towards new all-time highs before the end of this year, whilst my last in-depth analysis of mid-May concluded that stocks had entered a correction that would see the Dow trend lower towards 17,000 by the end of June 2016, just as that which has subsequently come to pass and now resolved in a trend that should take the Dow to new all-time highs. Therefore, so far the stock market has been trending in line with my expectations, i.e. for a temporary plunge on Brexit, now having recovered all of the decline and more, so has done nothing to alter my long-standing view that the Dow and probably the FTSE as well remain on track towards trending towards new all-time highs during the second half of this year, as the video May illustrates, and which I will come back to in great detail in forthcoming analysis. But for now, take this as another warning not to listen to the perma doom, perma clueless crowd, near always wrong, who once more are busy peddling crash, collapse and worst bear market in history fear that if they actually acted on their calls would by now have gone broke. This is whilst the likes of the FTSE clearly remains firmly within its trading range, which for a bull market tends to be a precursor for breakouts to new highs, as has been the case for over 7 years now, which is the message I've been iterating for the duration of this stock's bull market. And remember to subscribe to this YouTube channel for more videos in this 10-part series, as well as new in-depth analysis and detailed trend forecasts.